This is Justin AMZN on Tuesday, July 23rd, 2019. I drew this line back in because it came into play again. Pre-market, we were right back up at this level, and I'm just showing kind of where the line is coming from, and hit it here and here and here and here and then again here. And so let's zoom back in on what was going on. Pre-market just ran up and just held this as a really good resistance. Tried to run up here. The high on the pre-market candle was 1997.23, and just the other day, the high was 1997.29. So 6 cents lower today. We'll get to that soon, but made a slightly higher high and then just came right back down. And even just the first opening candle here, indecision candle, we're above a nearby, like really close to nearby support, possible resistance. So it makes sense we totally pull back into that. But I'm sure a lot of people are looking for a bounce, looking for it to continue higher. And if you would just set your trigger above and a stop below this bullish candle, it would not have triggered you in. As it formed this candle, you would have been thinking, well, maybe I should flip this trade and go the other direction. You actually had plenty of time to do that because it sold off and then recovered and retested here into the 21, right back into this same range if you had set up your trigger to get in here and a stop up here. And then that trade worked for probably 2R here. And then we're really, 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 really close to 1972.50. I was watching these candles form. I'm like, come on, just come down there. I wanted to buy it right here off of this support because what I talked about just the other day was getting a double bottom here. And actually it was just yesterday's video saying, well, this could be that retest of that neckline, but you know, I kind of wanted to see it happen down here. We totally retested the neckline. We just didn't come back to 1972.50. And so I was just really disappointed it didn't actually hit that. And yeah, just ran. And so that's all it did. After it came down here, it's like the pressure was on. You see these bearish candles, a lot of bearish pressure. And then this is like, oh, we're just going sideways. We're not going down right now. We're not going up either, but starts to break out. Okay, well, there's a retest of that level. Continue to push up. It's like, okay, now there's a bunch more bullish candles. That's the technical term, a bunch more. And, the bearish candles are kind of disappearing here. And it just continues up and it will flag here. And then it just, bursts back up to 1990. And then it pushes on through and retest from above. This is what I'm sure a lot of people were looking for at the open, for it to come down to the level 1990 and then bounce. I was looking for it to do that, but it didn't want to. It wanted to move down a little bit further. And so we have another day. Sorry, I keep zooming in and out. Another day where we've done this kind of like U-shape candle, or U-shape 5-minute on the daily. So we had this one here, and then we had this one here, and now yesterday we had the morning do that, and then today we have the day do that. So there's just been a lot of back and forth, and back on the daily, we've been in some of these no man's land down here, but not as much here. But this is really playing out like that, just bouncing back and forth between these levels. And so, like I said, there was a great opportunity down here to just get into that long. There are some clear opportunities to get in bearish here, and just the trouble is the option. So I'm looking at the 2050 call. That it came down to almost 13 bucks. But even if you had waited till after I put in these lows and were looking to buy, you could have set up a trade getting in 14 by 13. I don't even know if it would have filled. Much lower volume than we usually see. I said that yesterday too. But then that went from 13 up to, back up to this resistance around 17 pretty quickly. And you could have just, taken that trade up for 3R. That totally would have worked. If you go out a little further, like 2075, the volume is scarce. There's just nothing. It still would have moved. It just, there's 2 here, and then, oh, that one's 20, but just the exact price. Like, it's just filling at whatever price because the spread's so large. Back at 2100, you have a little more, candles that actually have some meat to them. And this would have been another great opportunity here, just to buy at 5, nice round number of 5, and just ride that back up. But it only made it up to 7. And so, like I'm saying, if it hit 1972.50 and the bounce from there, that could have been 2R. But again, that's 2R, and it moved significantly. I mean, it moved from way down here. A normal non earnings week, this would have been a tremendous move. Probably would have gotten you, like a $10 move. No, not 10, because we're going what, $20. Your delta would have had to have been 50 or maybe 40 to start out, and then get up to like 70 up here. So you're probably looking at maybe a 1985 call. Well, it depends on what day. Never mind. Just depends on what day. So anyway, that was the buy down here at that dip, or buying, if you had waited to buy after the candles formed, you still could have done like 6 by 5, or maybe even 550 by 5. And then that would have been, a nice move up to 650 for, 2R gain with 2 of them. And then for the puts, initially we pulled back to 1990, and then we went kind of sideways right there. And this was the opportunity. You could have set up a trade 9 by 8, scalped a quick R as it pulled back, or just held on and it came back to 9, or give you a second opportunity to get it at 9, and then it went up to 11. And so even on that sell-off, that's still 2R. Probably should not have been moving your stop so tight if you did 9 by 8, probably up to 850, and this would have still played out. And then once this candle comes in, you move it up maybe to 865 or something, and then this candle comes in, you move it up to 9, so you break even. And as it starts to move in the direction you want, and then you've got your target up here at 11. But like I said, that's 2R. But those were the opportunities to play this bearish here as this moved up, and then bullish here as that just rallied, and that would have been this. So, but it's just a matter of picking the right option that gives you that risk. And so, I mean, even the 1900 put, we could look a little bit closer, like 1925, and the volume is just scarce again. And so you could try something even closer, like 1950, but then this just gets that much more expensive, So this one was, buying probably up here for like $2,300 and a stop at 2,200. That's probably already the size of the spread. You're going to get in and get stopped out immediately, probably. So you got to be further away, and to be further away means you're not going to get as big of a move. Like this had a great move. If you have a larger R, like $400 R, you could have been doing like 23 by, I say 423 by 19, and then just scalping an R or something. But still, it's a lot to risk and looking for a lot to return with a bigger move, and it's harder to do this week. So just continue to play things cautiously as we have less time left in the week. The out of the money calls and puts are losing value, not as much as they would on a normal week, but things are really setting up for whatever's going to happen on earnings. And if we take a step back out here, actually, let's go to the daily. What I would really like to see, and I know today was, seemingly a bullish day, and it seems crazy that we ended up with a bearish candle in the day, or a negative candle in the day. Oops. Going back over here, this is still a second retracement of this island reversal-ish sort of pattern up here. So this was kind of your first immediate one that I'm kind of discounting. This is your first real retest of this level. Here's your second retest level. I'm still fine with this pulling back a little bit more. Actually, I would probably want it to do that just so that we have more bears loading up, saying, okay, that's it. It's going lower. It's not going to hold this. And then I'm just looking for a gap up for earnings. And, for it to get way up, above 2050 and 50 cents is the all-time high. So getting above that slightly, or even getting above any of the candles in here, could just thrust this thing higher, and it could just run. If we gap down, I think there's maybe down here that it could sell off a little bit more because you're below this pivot. Definitely when we get down here, it could be a buying opportunity. So maybe a little bit of selling at first because so many bulls are stopped out or losing money and may exit their trades. So that'll make more selling come in and push it even lower. But getting back down here could be a buying opportunity around 1600. I mean, that would be a great place to load up. Back from the all-time high down here to the move down to here, this high wave candle, the low in this was 1307. And, that was, it seems like a long time ago, dollar-wise. We have not moved, this was 7 months ago in December. So 6, 7 months ago, whatever it is. So this kind of move, I mean, we've not quite doubled, but 50, 60%, somewhere in there since then. I mean, significant to do that in that kind of time. And so I'm not saying it can't go higher. What I'm saying is if there's any opportunity for it to come back down to do something like that, I think it'll make a massive, bigger, double bottom sort of thing down here. And then it's off to the races and possibly even more, even stronger bullish than this. But anyway, back up in here. I'm okay with a little more sideways. I'm okay with it starting to move up. I would really like to see a bearish candle on Thursday. But if we don't get that and we still gap up, if we get a bullish candle, I still think that there'll be just a little bit of selling, people taking some profits, and then it's just going to run. But we'll see how things play out as it gets a little closer. We do have a decrease in volume. We're back to that same volume that we saw through all of this. So this is kind of like, I'm going to call this a stair step, and I'm just going to call this another stair step that turns this into like a bigger flag sort of pattern. It's really hard to kind of see it like that because it's big, but it's very similar to this right here where we went sideways, pulled back, went sideways, and then we gapped up and we ultimately rallied pretty quickly. And so if we can do the kind of pauses, here and here, again, here and here, I mean, we're going to be off to the races pretty soon too. So, yeah, that's what's going on. So I'm going to leave this line in here, and then I think there's some sort of fundamental thing happening with some legal thing. I don't even know what it's called or what. I just heard something that there's some lawsuit, class action, something like that, some fundamental reason that this is happening. So as we sit right now, we do have an opportunity to, pull back to the 1972.50. We'll, watch how this opens, see if we can hold that with a nice hammer type candle, morning star reversal. We'll see if we're even back down here in the morning. But if we get anything to pull back further, I would welcome that, like I said, and I would be fine if it pulled back, to these same lows. Actually, it'd be even better if we actually hit 1950, made a new low, get more bears pushing that lower, and kind of pause there, make an inside candle, another bearish one. That'd probably be ideal here. So if we actually open up right around here, I think it's going to trap some more bulls from buying up that wick. It should push back into the 21, which is at 1960, but I would still want it to come back down and make a new low between Wednesday and Thursday. And I think that would give a really incredibly strong opportunity if it gaps up above, the more bearish candles, the better. But that could really launch things higher. So we'll see. We'll see how that plays out. We're bouncing off the, seemingly bouncing off the 21 here. We're a little above it here, but I'm just seeing some similarities that this is pulling back. We could, I just like kind of this candle, similar to either this one or this one. So look back at some of these candles and see how things moved when we were, kind of a little bit above the 21 or bouncing off the 21. We're still kind of in that framework here. So that's why I'm kind of picturing this or this to see, okay, well, what happens if we gap up? We'd have a candle like this. The more bearish candles we gap above, the better the opportunity is to trap bears and just see the bulls make this rally. So, and then going back over to the all-time high, Yeah, so we kind of did a stair step and then another pullback to a stair step and then ultimately moved higher here. This wasn't an earnings gap, but that one sold off initially, then got bought back up. Yeah, we'll continue to check out the chart this week and see what's setting up. So I hope you enjoyed this video. I hope this was helpful. This is Justin AMZN. Thanks.